President-elect Trump made it very clear on the campaign trail, he's not against trade deals, he's against bad trade deals.
The Clintons gave us NAFTA. Think of it. The worst trade deal ever signed by any country ever.
So what can we expect from a Trump administration in terms of trade and economic growth? Mario Gabelli is back with us. Mario, there's a lot of talk about tariffs and punitive taxes. What's your reaction to all that?
Well, you know, about 60 years ago, I took Economics 101, and we all read about Smoot-Hawley in 1930 about the impact that it had on the economy and making it worse. There's no question what I do.
Smoot-Hawley was a trade tariff that was imposed right after the Great Depression that embargoed goods.
Well, it was imposed in 1930, and the Great Depression continued. But notwithstanding that, Ricardo and Adam Smith, the two economists back that were the fundamental forebears of the capitalistic system of allocating capital, would argue that you would want to have the low-cost efficiency.
You said you're a stock picker. We've had this cataclysmic event this week. Give us some companies that are going to benefit as investors now in what you see as the new paradigm.
Well, they already have to a degree. The markets are very quick and they adjust. But let's talk about. You have to be thinking in the last 48 hours under this scenario. Higher interest rates, higher earnings growth. Who's going to be a beneficiary? Where should people be thinking? Well, we've already been started there because let's look at several infrastructure plays.
Right.
What does that mean? It means roads, bridges, inland waterway. It means everything that we can think about that we need help on. That's fiscal policy augmenting monetary policy as that wanes in the background. Companies like Mueller Industries, MLI, located in Memphis, Tennessee. That
I've actually visited them, been down there.
Good for you. Yep. You also probably visited the Elvis Presley Museum. Basically, and the place where the little peacocks come out at lunch. Basically, the stock is a beneficiary of construction, and they have copper that they process. Vulcan Materials, Hard Rocks, companies that rent equipment like United Rentals, like Herc Rental Company in Ashted, $45 billion industry, equipment rental, fragmented, likely to consolidate, a little air pocket right now, but in the next 3 or 4 years. Companies that make asphalt equipment like Ashted in Chattanooga. There's a whole array of companies that are tied to that. The second area that's more obvious is the banking industry. The banking industry where you have a strong banking industry in the United States. We're going to unleash the power. They're going to unleash their loan capability. And the ones I have selected, because I like the trust banks that are going to be global, and they're going to dominate the trust departments.
Which ones, man?
Well, the Bank of New York, State Street, which I think Jay Huey's doing a great job, and Northern Trust. In addition to that, the money managers, because they're concerned over this rules that are coming down. We need the rules, but we don't need them the way they were articulated.
We don't need the excess of rules.
Well, there was a commentary out of yesterday morning, Thursday morning, there was some commentary related to Dodd-Frank. Is Dodd-Frank going to be gone?
Well, listen, I know they're looking at it. I know there's been commentary from President-elect Trump about Dodd-Frank and him not liking it. I think the big issue there, Gary, is with the community banks. And so, Mario, we both know many banks are not lending. You think that will return to the marketplace?
Yes, because basically, if you're worried about getting over a certain threshold of capital, then you have to worry about significantly financially interested as SIFIs. And so part of that. But the second part is that banks in certain growth markets like North Carolina, South Carolina, Florida, they're going to have to be bought and allow the northern banks to have that deposits in that.
Well, that's going back. That's like going back a decade.
Yes, right? Of course.
So the bank consolidation play that was gone for a good part of
it's going to accelerate.
So you see it coming back.
Yes.
And who's going to be the acquirers?
I would think M&T Bank will move south with their customers. PNC with their BlackRock. Even though they have that mindless investor Larry Fink. With their ETFs, they'll be able to do that. But the money man, like Waddell and Reed, Janus, doing a deal with Henderson in the UK, T. Rowe Price, those will do well.
I was too young to remember 1980, but you and Gary are not. Is this like 1980?
I actually remember 1873, 1898, 1907, 1919, 1929, 30. I mean, the great opportunities to be an investor for 100 years.
You're bullish on the long term here as a result of what's going on?
Capitalism gets a big tailwind, and that is very important in the way to allocate capital. With all the flaws, the notion of that free market, which I started with, the rule of law, the meritocracy, where anyone that can grow up in the United States and have a future for them and be blessed, to me, that's very fundamental.
We're all products of that, though, thank God.
And it was the Peabody Hotel that you were thinking about in
Yes,
Memphis.
it
For all
was
those down in Memphis, Tennessee.
The
Mario,
Peabody, thank you.
Thanks for joining us today. Wall Street Week will be right back.